The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday on market days. And it is, of course, Monday, the beginning of the week. June the 23rd. And let's see. I've got some signals here that are saying we just in a little toppy area at this particular point. The close today and tomorrow are going to be very important. Tuesday, the Monday after options expiration. Usually you got to watch out. There's a little bit of a kind of a stalling pattern. And then it's the Tuesday where we possibly could see a directional change. Let me show you what I've got. On the 120-minute Dow E-minis, that is the E-mini S&P 500 September 2014 contract. I've got the pattern that I call the Chapman Wave stalk leg, sharp leg up back on the 18th, goes sideways, makes an oval pattern, breaks out, starts the neck pattern. So you've got a leg, the body. If you're looking at Tiger TV, now the neck starts, and we formed the head from last night. And what we're looking at is a good chance that this is the beak, and the beak almost always, goes at least into the body, which is at 1952.25. The low today so far is 1951. So we've already done that. So this is an important moment. Most importantly, I've got an alternate count in the daily. And that important count says this is either leg F for a final move in the daily before some kind of moderate, at least a moderate consolidation takes place. Stochastics at 91%, but it's making that potential M pattern where it just pops up over 90% and within 3 to 5 sessions goes back under 80%. We're going to watch this really closely. MACD is good, but nothing like it was when the E-minis went to the 1947.25 high of the 9th of June. That's number one. This whole thing is number one. Now here comes number two, the part of it. Number two says that if this is in fact is a brand new move to the upside and it's only leg A, then 1942 to 1935 should not be pierced over the next coming few days. And in fact, we should make a new recovery high above 1959.75. That was the high from, was it last night? I think it was last night. Yeah, last night on the 22nd at 22 hours. It's 8 o'clock, 10 o'clock. So what we're looking at here is there's a chance that in this rotational market, we're looking at a number of aspects that are possibly on the shorter term culminating. These are sectors or stocks within sectors. And within that context, what we're looking at is there is some strength, and that strength we're going to see if it goes into the heavy cyclical stocks. And I've seen that before. With the heavy cyclicals, I remember when Bethlehem Steel, some was BS, used to do very well when the market was pulling back in moderate down cycles. So it's no longer trades. Was it taken over or something happened? Anyway, so let's run the numbers, and I have to say thank you, Steve Rhodes, for introducing us to the week with a fabulous 2 hours. Most importantly, what I'm looking at here is that the Dow is... did the Dow make a new recovery high today? So on my service is the opening call. That's my daily newsletter. And the daily call, I show this particular chart every single day, and I discuss it in terms of the different parameters that we're looking at, etc. There's just a rectangle here that I start typing near the close of the day into after the close, and then I add another whole paragraph underneath it to explain why and what and how. But if you're looking at the slow stochastic at 80% in the Dow, down 26 at 16,921, there wasn't a new recovery high today. That high was on Friday and was at 16,978, I believe. Yep, 16,978. Let me type that in. 16,970. Oh, and I do have to thank, well, I'm hoping that I'm going to be able to thank TradeStation. They mentioned one of the folks that I've been dealing with mentioned that I must be the only one that has this problem with the typing and the disappearing letters and trying to put the symbol in, kept them going to the into the symbol box, a whole bunch of things. Well, in their latest upgrade, in the beta model that they've sent me and others to try out, they've resolved just a huge number of my own personal issues, and I just have to say that is going beyond the Call of Duty. I really appreciate it. I know I've gone beyond the Call of Duty for TradeStation because I've always been very impressed with the acumen, with the integrity of TradeStation. So thank you very much for what you did. I'll give you the full thank you in about another week when I've really had it tested, and if there's a couple of power failures or something to really give me the shakedown. So when I'm looking at this, I'm saying the 9-period exponential moving average at 16,873 will be important, but it's really a close underneath 16,800, and this week, without making a new high, that will tell me a great deal of information. The MACD is flat, not showing strength, but it's not showing weakness either. The stochastic at 80% is really close to going under 80%, and as a result, I'm suggesting that this is something that one has to watch really closely. The VIX index rallied a little bit and then pulled back and then rallied even further. Now in the 120-minute chart, finally we've got a leg B in this move that went to the downside pretty quickly. And in this particular move to the downside, what I'll be looking at is, where did it go? There it is. I'll be looking at a couple of things. I'm just trying to get a color in there. Gray. Okay, that's a change, and I'll get used to it. Okay. And that's a peak F in the 120-minute chart. You can see why I'm a little bit nervous here, just in terms of now I see so much in the way of folks just not being bearish, but saying we should have a little bit of a pullback, but the strength of the upside is really, really strong. I personally am seeing a lot of indicators from this morning at 11:15 at this particular point that are saying, or well 11:30, that are saying, be a little careful right here. Okay, so let's get back to the story. We've got the S&P down 1.95, down just 0.10% at 1960. But what's really interesting about this, let me go to the chart pattern. If you're looking at the S&P, SPX.X, look what happened. This is a potential peak F/B. Now, what does that mean? It means that was a potential instant restart back on, give you the date, back on June the 1st, was it? June the 2nd. And that's usually very positive. But the MACD is not showing much strength, and the stochastic, while it's showing strength, is saying there are a couple of indicators here that say in the next 3 days, if there is a pullback underneath 1950 key support to the 1944 major support area on the short term, that's not going to be a good sign at all. Now, I haven't finished the 120-minute chart. Let me just do this now. I've got an up arrow. Let me just do the old one there. That was a D. That was an E. And for those of you who know the Chapman methodology, you know that a peak F top where the technicals are deteriorating can give you a very sharp pullback. That's the 6th highest peak from the most identifiable low bar. It comes down in trough A, B, C. Look how nicely I can do this now. Isn't that? That's beautiful. Thank you, TradeStation. So here we go. On the way, it's a trough E on the bottom, and then it goes peak A, peak B, peak C, peak D, E, and a potential peak F in the 120-minute chart. So we're watching this closely. Very short term, 1956 is the key. Close below 1958 or 6. Whoops, let me double check. I don't want to give you a wrong number. 1958.74. So I'm going to say close under 1958 on any 120-minute bar, 2-hour bar will be a negative. So let's go on. You got the comp index, COMPX, and that is at A, B, C, D, possible D in the 120-minute chart, DE, possible F in the possible F in the daily, unless it's recycled to a new B. Very important couple of hours coming up. That's the next 12 trading hours. That's the daytime hours, going to be real important. And you've got the QQQ series having kind of failed yesterday. Went to a peak G in the daily, peak D in the 120-minute chart, trading at 92.58, just down 19 cents. But if it goes down below 92 in the next 2 days, I said that's pretty much the short-term top indication. So now let's go on to the gold. GCQ 114. What do we have? We have, oops, I lost that. Yeah, peak D is probably being established today if there's no new high in the gold. Is that August? Yeah, August contract, about 1322.50. Most importantly, what I'm looking at here is that in terms of gold, the 200-period moving average is just such a strong magnet, and it is also a strong repellent. So you could see a trading bounce, could go to a D and then consolidate for about 3, 4, 5 days. But the MACD is improving. Stochastic is at 86% and rising. The 120-minute chart has had a high-level consolidation. I am impressed. I'm impressed at the action in gold. It could be telling us something about the general market. GLD is having the same thing. Peak D was confirmed, holding the 200-period moving average. It's the weekly chart that says if this week there's a really strong move in gold that goes, the GLD goes from 124.55. A key support doesn't break that. It's at 126.76 right now. If, in fact, it goes to 129 to 131, then that 133.57 level on the 200-period exponential moving average, I would say, has to become a magnet. And what's really important about the monthly is instead of breaking down in the H pattern, there's just a chance, and I'm going to be watching this, believe me, this is very important. If, in fact, the technicals turn up by the end of June, and the GLD is trading at 131 or higher, I have to say that there's another big H pattern going to a lowercase m pattern, giving a trading range even to the 139, 140 area in the GLD, rather than breaking down, which is what I thought would be a possibility. I'll just quickly give you high-grade copper. I saw earlier that it was not doing, let's see. Okay, so it pulled back down from the almost 3.2 down to the just over 3 to the 3.08 level on the continuous contract. This is now leg A, a very strong leg A up above the 200-period moving average. Boy, if this is saying that the economies around the world are starting to improve, that's going to be important. Why? Because it looks like from the action right at this very minute, and that means the weekly chart has barely begun the week, but it does look that if it continues rallying, then 3.1925, 1 penny above, or just 3.1926 starts leg D. And that would be the weekly chart that would improve the monthly. I'll be right back and take your calls at 877-927-6648. Basil Chapman, Tiger Technicians Hour, and the author of The Opening Call. Very comprehensive daily look at the markets.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Yeah, we are. We're back. And I had a couple of questions during the break. This is what is this? This is ERF Daily. This is the Inner Plus Core. So it's trading right now at 24.38, down 3 cents. Whoops, how did that move over there? That's very interesting. Okay. Oh, there it is. Okay, B. I've got something I learned. So A, B, C1, C2. Okay, monthly says stopping dead right at the 200-period exponential moving average, and it's at 24.38. That's just about the line in the sand for the start of resistance in the 200-period moving average, but the MACD is very strong. Stochastic's very strong. The daily, I always have to go. The weekly, I need to go back a little bit to see where the low bar is. So we'll do this. It'll be real quick. Watch this. Here we go. Low bar. Put an up arrow, and then we go peak A, peak B, peak C. Oh, now I'm beginning to move back at quick speed with my trade station all fixed up. Good. There we go. There we go. There we go. There we go. Now let's update it. Moving along. New up arrow. Oh, isn't that interesting? A, B, C. Did it go to a D? Yep, it's gone to a D. And this is now an E. So it's just at this particular point on a short-term basis, a little extended. It's above the daily 20.70, very strong propellant area of the price range in the daily. And what's happened is it's held the 9-period exponential moving average, that black line, beautifully, and that makes it 24.41 right now. it looks 22.98 to 22.50 really will be the test of support. If it breaks under that, it could come back to 20. Is that a spectacular move? It looks like it's in an uptrend, a very strong uptrend in the weekly and the monthly. Now let's go to the daily. The last one got a buy signal right there early in May. Let me get that up arrow. There it is. And that goes, beautiful candle. That's a beautiful candle now, but it wasn't before, because this candle was a Chapman wave Roman candle. Said that if it got anywhere into the 20.70 area and held, it would probably test the low down of the 20.20s. So instead, it went to the upside, and that's really important. So this is A, that's B, C, and it's just indeed just struggling to get to D. Gosh, so many of these stocks have this kind of pattern at top. Look, IBB, same sort of thing right here. Not IBB, I meant SMHs. SMHs right here. Look at that. Just struggling right at the top here. So this is a very important. So let's go back to, of course, I have to look at the symbol again because I completely forgot what it was. ERF. ERF at this particular stage. Okay, the question is, what about it? Basil, anything appropriate? Can you review ERF and also energy complex? Okay, so at this particular point, I believe that ERF is a little bit overextended. It's still in a buy signal to buy mode in all the time frames. Why did I lose that? Didn't I just do the ERF? Didn't I just do all the symbols on ERF in the monthly as well? Good grief. What happened? A. Yeah, I think I did. I just did it. A, B, C, D. I think that might be E. Just give me 1 second. High is 20.18 and 2017. There it is. So that's an E and an F. Okay, that's what I thought I said. Okay, so as it stands right now, it's just bumping against resistance in the monthly. It's nicely above resistances in the weekly, but on-bounce volume and some other technical tools that I use say just a little bit toppy right now, and that toppy is confirmed in the daily. I would say that I'd like to revisit this. If you aren't in it, I think you have to wait. Revisit it between 23.68 to 23. I'd have to say 23.20. If it doesn't hold that, then you just have to hold off a little bit because it needs a little more time. So I hope that helped you there. Let's go to John in Philly. Hi, John. How are you?
I'm very good, Basil. I wanted to ask if you could give me some help on level 3, LVLT. By way of background,
it's interesting that you're talking about level 3 because I was having a level 2 issue. Hey, I don't believe it's a level 2 only in that I had to get something that I've been working on to be very level so that, you use a level when you're doing some housework. You got one of those tools. What happened here? I was just praising.
What I would like to ask you about, first by way of background, this is, I own this stock at 37 back in April. It is not a trade. It's a portfolio stock for me.
Oh, I like that. Hey, John, we're just about to go to a break. I like what you said there, and I'm looking at it. I'll be back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Folks, we're back. We're back down now at 16,907 ounces. I'm expecting some weakness here. We're preparing for my opening call subscribers. And you've got the S&P down 3.5. That's interesting. All of a sudden, the S&P has picked up a little steam to the downside at 1959.48. I want to go back to our first caller. We've got John in Philly wanting to know about LVLT trading at 44.87, up 16 cents. Now, what I've been very impressed with in my analysis of this, having just done I used to have this all notated, 10 ways to Sunday, whatever the expression is. But I seem to have lost some of the notation, so I've just redone it. And basically what I'm looking at is that the weekly chart has made a very long-legged leg C, which is, I always, when I see this, I just grab the outside wicks and I just draw a rectangle and I say, okay, thank you for that information. Because what it says is that if there's a bit of a pullback, there should be an inside Chapman wave buy that gives you some kind of an peak ABC to a D, or it'll be the 120-minute chart that'll take you above the recovery high at 45.97, just a point and a quarter away from here. Now, what's very important about this, John, is that this is one that's been on my eye for a long time, and one of the reasons is I don't think I've ever traded it. I always look at it as a stock that gets away. One of the things about it is it has just, I'm going to pull this chart back so you can see. It has these historic moves that if you're in the trade as it's moving up or in the trade as it's moving down, that is fantastic. But if you're in the trade in the wrong way, or if you get into the trade late, because this started its IPO late, it got in 1998. In May, it opened at 373. Of course, this is with the splits and everything. That's the number I'm looking at right now.
Yeah, Basil,
yes.
could I interject something right here?
Sure.
Yes, I'm looking at your monthly chart going back to its inception, back to 1998.
Correct.
And if memory serves, I could be wrong on this, but I believe when Level 3 merged with Global Crossing, which had gone into bankruptcy, I believe Level 3 took over, if you will, the slot of Global Crossing common stock, and hence that $1,600 high. That was actually Global Crossing back then. And you recall the frenzy was the explosive growth thought to occur in the future with global communications, with over fiber optic cable laid on sea floors. So that's what this history was. Now, I had bought this back at 37 in April. It had dipped. On May 1st or thereabouts, upon an earnings release, it surged. It ran from 37 up to like 42, 43. And then this past week, Level 3 extended a merger, a buyout offer, and was accepted by a Colorado-based competitor called TW. And any case, so that's what had happened here since I bought it at 37. I noticed last week the stock made new highs, and I see you've got that labeled on the daily at F/A, but it made new highs, and it had massive volume, and of course that was associated with this buyout offer that LBLT extended. Anyway, so that's the history. We've got volume on the weekly chart highs here. My question to you very specifically is this. Is there anything that you see when you apply your Chapman wave techniques that tells you there is some obvious target or something obvious to look at that I ought to employ with my long position at 37, like a particular
Absolutely. Now, one of the reasons why I seem not to have ever gone into this, or maybe at some point I did, but for a brief moment, is because in the patterns that I'm looking at, when you are in the trend, you tend to be best off staying in the trend, even though there are pullbacks. Why? Because of those very things that I was talking about, because of those stair-step moves. In other words, it makes a move to a new recovery high that it hadn't been to, and then it has a big digestive system. Sometimes that digestive period can last a year, but then it breaks out to a higher high, and one of the reasons is at this particular point, the MACD is holding, whereas every other time the MACD started to pull back, and the stochastic went above 80% or touched 80% for just 1 or 2 months, and then it broke down. This time what you've got is a very steady at 96% in the monthly. That's showing internal strength that can only be pierced if the daily starts to really break down, fill the gap. There was that big gap. That's what you're talking about, the latest news event. Back on the 29th, it's trading and closes at 37.11. Next day, it opens at 40.44, and that's the gap that at some point will absolutely get filled. But this is what I'm looking at. If you're in for the long term, there are just 3 things that I'd be looking at. One is, if there's a breakout, the high on the 18th of June was at 45.97. What's really important about this is that if there is a close this week on any session about 46.70, I'd like to think it would be a little higher, but let's just say it's above the previous high of 4 days ago, and not only that, it holds and it even sneaks a little higher. That will get the stochastic to 80%, and the MACD will start to expand. As it stands right now, you see what I've got in the weekly chart? This weekly chart says to me that on the shorter term, there is a chance that the upside is limited to about the 46s,
Right.
not much more than that, and that we will come back and trade within, and then we will test. This is what this candle information tells me, that the long-legged doji of last week tells me that the open of 44.67 and the close of 44.71, 4 cents higher, that is going to be touched even if we go up and even if we go down. It's like a magnet, unless it's a very forceful move that takes it within 2 weeks, way below 41.28. That's the low of last week, and the high is 45.97. If it takes it sharply above, then that direction will continue. And if it takes it sharply below, it says, be careful. There's a reversal, probably just to use up some time after a very good move, just another consolidation phase. That's the way I'm looking at it now, because you say you're in at 37 with a longer-term perspective. I tend to say to you, let level 3, LVLT, tell you the story, because at this particular point, all it's saying to you is that there's internal strength, that we might have a little bit of a consolidation, but the trend so far has not changed other than the daily. The spike the other day went to new recovery highs, and the technicals were very weak, and that's really suggesting to me this is probably a peak F, and it's like a single leg A that goes straight up and straight down. And it's what I call a rogue wave, where, in fact, if you were short for just thinking that you wanted to test the gap in that 40 to 37 area, you're probably correct. But there was a rogue wave that spiked it up on some news on the, what date was that? That was on the 18th. Right. And that 18th, that spike to the upside was just more emotional, and now you just need to do some consolidating. So I think you're on absolutely the right track in thinking of it as a position play rather than a trade. And number two, so I said three things. One was what it had done. Number two is if it spikes and breaks out to the upside, that's very positive. But the third thing is, if I'm correct in my assessment of the close of the candle of last week, if it goes up, it's still going to come back and test the mid-44 area. And if it pulls back mildly before it takes off to the downside a little bit further, it'll still have one little tag of that 44.50 area. So,
yes, thank you on that. I will just share this. What I'm speculating is occurring here is this, that level 3 is characteristically similar to what happened with Comcast common stock. And Comcast common between 2000 and 2011 had just gone sideways. Now, the common stock did nothing. There were ups and downs, clearly.
Right.
But it did nothing for 12 years. And it's not that Comcast was not growing. It was growing and growing and growing, except every year that Comcast was adding to its cable system or building its business, it was doing so with debt financing, with all sorts of interest expenses, and that debt service kept earnings under pressure. So the business was growing and growing, but the earnings effectively were not. The cash flows were not, because it was all debt financed. In the case of level 3, something very similar has been going on for the past 10 years. And then they've just done this deal where they've acquired a competitor, and my suspicion is that, like, going the next 3-4 years, they will be in this mode similar to Comcast between 2012 and now, where their cash flows jump, they pay down some debt, their debt service goes down, and their EPS goes up, leaving that being the driver for the stock higher. So that's kind of what I'm thinking.
Okay, yeah, I think your reasoning is contingent on the similarities historically, and what I did is I just said to you, okay, if that's the case, the technicals seem to confirm what you're saying. I would only give you one little word of advice here, what are we looking at, LVLT, that if, if for any reason, whether it's the market, whether it's just an individual problem, how did I on earth lose all my notation? I just typed it. This is the second time I've done both the daily, weekly, and monthly in the last hour, and I can't believe I just lost it. Oh, wait, one of them came back. The letter C. Well, that's all we need. That is so weird. I'll have to find out what's going on. So now here's what I wanted to say to you, John. I don't know what your stop is, but if it breaks under 37, but preferably looking at if it breaks under the round number 36 low that was made in May, the week of May the 2nd, then I would say to you, be careful, because that will have changed the daily, the weekly, and the monthly chart. More the weekly chart than the monthly chart. And if it does that, you've got to look at 37.66 really as a key support level on the monthly chart in the 9-period exponential moving average. I don't see that right now. I see a test of just above 41.20 to 40.90 as probably being really good support. But let's see, and before it even, and then it could hang around a little bit before it even comes into the gap. But at some point, you bet that gap will be filled, but we don't know when.
Thanks so much for your help, Basil. I do appreciate it.
Good eye and good position playing, John, and good thinking about it. Thank you so much for calling. That was John in Philly. We're looking at LVLT. We're going to Rich in Orlando. Rich, how are you?
I'm doing well, Basil, and yourself?
I'm doing very well, thank you.
Wonderful. It's a beautiful day in Orlando, Florida.
It's it's a spectacular day in Boston. We treasure these days because we don't get too many spectacular days.
Well, you just enjoy them while you get them.
Yep.
So on this Val, what are your thoughts there? I thought it kind of tested the bottom. I thought it kind of had some strength off the bottom. It's going to open up on the positive side today.
Yes, I looked. So Vail is a company that is involved in
basic metals.
It's a basic metals. I can't remember which ones are specific to it, but it's basic metals. And it looked like it wanted to test. It did. It went to a D in the monthly chart. It's the same as silver. It had this horrible pattern, but it started to flatten out and making the whole area of, it's a VALE is trading at 13.23. It made a low just 5 days ago of 12.55, and that 12.55 was just a little above the 12.29 low back March of 2014. Now what I'm looking at is that I did some work over the week. I did a lot of work. In fact, I went through all these different chart sectors that I'd like the semiconductors and some of the oil, service, etc. I just went through a whole chunk and renotated them. And I also went through some of the metals. Am I thinking here, do you have a position at all?
I do. I actually got into it late last week. So I'm actually on a positive side, and I'm happy to be there. It's just that I was expecting it to accelerate out of here, but with this crazy market, I just don't know anymore.
So this is the way I'm looking at it right now. As far as I'm concerned, this is a leg B. It's the second attempt at a leg B. Is that a third in the most recent few weeks, and it's the one that has the chance of the most success, and I'll explain why as soon as we get back, Rich. I think you got yourself in for a very nice trade, and I'll explain some of the things that I'm looking at. I'll be right back. Dow's down 42, S&P's down.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. We're back, and we're looking at Vail. Valet, as some people say. I think Vail is the way they say it. And I've got it in leg B in the 120-minute chart. And Rich has started a position in Vail and is working very nicely right now. It actually gapped up today in the second 120-minute bar. He's bouncing up against the Chapman Wave inside track trajectory line, and that's that pink dashed line there. And it has a price, left side, right side price time match, which says that by 15:30, that'll be 3:30 tomorrow. What's today? The 20. By the 25th. No, that's in a few days' time, 2 days' time. So should try for, I just typed it in, for the 1341 area. 13.41.
You mentioned the 9-day exponential average, and it jumped above that also. It
did, and once it does that, it tends, if it can hold above it, it tends to treat that as some kind of a, instead of being a repellent line, it's a propellant line. So here's the other thing that I was looking at. In the 120-minute chart, that it has gone above the 200-period moving average before. When it went to peak D back on the, let me lift this up, back on the 11th, I think it was. Yeah, 11th of June. Then it pulls back in just three, a trough B, and a trough C. And now it's gone into leg B on the upside. I am beginning to like this a lot. I need to just see that I didn't forget that. 1265, 1265, yes. Now, here's what I'm looking at. I love these patterns that repeat and make a cup formation. Actually, I'd already drawn that in. I guess I didn't save that. It makes a cup formation. Then it makes... it's like a sine wave. It makes the cup formation, then it makes the arch formation, and then it says, geez, this is like a little kid, you know, at one of those Disney fairs or something. This is such fun. I want to do it again. Yeah, no, that's exactly what it's doing. And this time, the technicals are way better than it was when it started off before. No, it is not way better. It's way better for the second part of it, and that's what I like a lot. So that's the 120-minute chart. It'll fail if by tomorrow it's gone under 1290, and this point is at 1322. Here's what I'm really liking in the daily. The weekly is just going to have to play out, because the big thing, it has to close about 1341, which is the high of the 13th, which is my projection here on the short term. And then the next level is way up at 1424. You'd love to see that, I know, but that would be the next left side resistance. So what I'm looking at is that the 1261 low, 1261 low again. So this is leg C, goes C minus because it went lower. Yes. I just have to tell you this, that if it breaks 1341, it doesn't have to close there. I prefer if it closes over 1341. You're looking really good. I think it's turned the corner, and now it's got a nice base of support, and that's the best thing that you can say about any stock at this particular point. So excellent. I'm going to say to you, congratulations, nice entry point. I would think of adding a little bit if it went to 1342, and it did it preferably no more than leg C in the 120-minute chart, because what would happen, you could just nibble on that as a trading position and put in a very tight stop, because once it breaks above that, it should actually go quickly to 1345 to 1347, maybe even 1351 if it's going to do that. This should be the quick move in Vail for the first time to start a more extended move to the upside, because if it's going to fail, it will fail by tomorrow afternoon or Wednesday. It'll be back under 1290. Nice. Good eye.
Appreciate that. Okay, well, let's hope for that. Thank you very much.
Let's hope for that. Good. Thank you, Rich. Rich in Orlando calling. So let's do this, folks. We're about to run out of time. So as we're running out of time, if the Dow closes under 16,850 to 16,830 support in the next 2 days, we're in for a little bit of a consolidation, a break to new all-time highs today or tomorrow. Just says, hey, business as usual. But I think we're going to get a bit of a pullback. Stay tuned for Larry Pesavento, and I'll be back tomorrow. Have a great day.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.